So I look forward to a call from you all if by any chance I get knocked off technologically. So we discussed yesterday that the money broker, status of money broker, and whether you'll perform the functions of an agent. So although you are called money brokers, there are instances that you all perform the functions of an agent. By the way, is everybody joined in? Should we start 10 minutes past 4:30? Yeah, I guess there are 17. Everybody should be in, right? Thank you. So if you all can see if the slide presentation is visible to you all, we'll start. Payment and settlement systems are a vital component in the infrastructure that is required to perform the intermediary part of the financial systems or financial markets that the money brokers and the bankers are engaged in. Payment and settlement systems, I think we discussed about the Payment and Settlement Act, and on the legal part of it, it is going into deep and deep corners as the market develops. It should be said that even the court of law accept electronic messages such as emails, WhatsApp messages, Viber messages, and other text messages as evidence. So communication is a great ability and then a great feature in this market operations. So much so that the central bank, as part of regulation, they require the money brokers, the bankers, primary dealers, and all the participants in this market to record the conversations through the telephone systems, and then also conversations through the Reuters dealing system and Bloomberg dealing systems, whatever the mechanisms are, permitted mechanisms, communication methods allowed for the execution of transactions. The voice recording system is a mandatory function, and there are rules and regulations to manage such voice recording systems. The front office, all the telephones fixed to the front office desks should be recorded, voice recorded, and also the back office telephone systems. One may ask, why back office? Can anyone suggest why back office should be recorded, voice recording? I know people are reluctant to get that telephone systems, telephone lines recorded because they may not be able to talk to private things with their girlfriends and boyfriends. However, the front office systems are vital because the two-way codes are communicated or exchanged to the telephone systems, Reuters systems, or Bloomberg systems. Then the other party might say yours, mine, or I take, or I'll give, or something. And all those words should be recorded for resolution of a dispute that may arise subsequently. Then the question, why back office systems? As you all know, the front office systems, when they execute a deal through the front office system, they have to drop a deal ticket, and the deal blotters must be updated, and the transactions are booked into the computer systems at the banking institutions and also at the money brokers institutions. When such transactions are booked in by the front office, they go and queue up in a system in a spreadsheet until the necessary approvals are given by the middle office and the back office personnel. I'll come to the middle office later on. But it is good to remember that between the front office and the back office, there is a unit called middle office. So once the deals are input at the deals are concluded at the front office and input into the system, computer system, the queue containing the transactions, there may not be many as our market is small, but in large market, there can be 50 or 60, 100 transactions queued up at any given point in time. The back office people will, before back office, the front office, there has to be at least 2 or 3 levels of approval for the transactions to get into the queue. So once the approval is completed at the front office, with the more senior person at the front office approving the transaction by looking at the limits and various other aspects, the back office, the most junior person takes up the transaction by transaction from the queue in the system and goes through the limit for the counterparty and other systems and validity of a transaction, whether exchange rate or the interest rates is within the market rates and various other controls and checks. With this password, when he goes out or approve, when he says okay, then the second level of password at the back office is should pick that up and then gone through the transactions thoroughly for the counterparty, the suitability, and the acceptability. Particularly again check for the counterparty limits. So finally, in most of the institutions, there are 2 password levels, approval passwords, but there are large institutions which should have 3rd level as well. The senior most person's password, when he goes through the transaction and then approves it, then the transaction gets into the books of the bank or the money broking company, and then the confirmations are generated instantly. Confirmations to whom? Confirmations to the counterparty. In the case of a money broker, the confirmations to both parties, the buyer and the seller, or lender and the borrower. So these confirmations in developed markets are sent through SWIFT. We will discuss the SWIFT message type that is used to accommodate the confirmations transfer to the counterparty. But I think in our market, it is sent by email or Viber or WhatsApp, I guess, because just to save the cost. So that confirmation essentially has to be from the back office of the buyer to the back office of the seller. And nobody else in the front office should handle such confirmations. So we were speaking about the middle office. What is the function of middle office? It is basically the risk management. After the front office inputting the systems to into the system, the executed transaction, middle office guys picks it up and then they go through for the rationale of the transaction, whether it is okay, that particular transaction going by the portfolio maintained by the bank and counterparty limits, and also the dealer wise limits that is gone through. So with that, from the middle office check, there are occasions that the middle office reject a transaction. They have the power to ask or request the front office to reverse the transaction if the limits are overridden, or the limits in sense of counterparty limits. Then there can be portfolio limits for the institution decided by the board of directors or the asset and liability management committee or ALCO. So if any of those criteria is breached, the controls are breached by the front office guy knowingly or unknowingly, then the middle office can have a discussion with the front office dealer who executed the deal or concluded the deal or arranged the deal. And then if the discussions conclude positively, that what I mean is that if the exceeding our limit or exceeding the portfolio criteria or the rate criteria, if that is acceptable, or if any violations can be escalated to the senior authorities like the CFO or CEO level, who would have the authority to do temporarily amend or allow such exceedings because the transactions are profitable to the institution, gainful for the institution, or is going to create more positive market image for the organization and create value for the economy. And those, if those criteria are engaged positively, then the at least temporary authorization for the breach of such criteria can be approved by the next level of authority who possess such authority. So with that only, then the deals or transactions will appear on the back office queue. So it's a complicated process that happens in the approval process of the treasury division, mainly front office, middle office, and back office. So again, it should not take more than a minute or 2 minutes if the transactions are very well within the purview of the limits and then the authorities and portfolio criteria that are communicated by the board of directors or the ALCO. But however, there can be transactions which has to be deliberated with the several authorities that I described just a while ago. Those transactions might take as long as 5 or 10 minutes for the approval and then booking into the back office systems. It is worthwhile to note that the bank's set of books or the computer system, actual computer system, is maintained by the back office. All the activities of the front office are on the surface of it or on a memorandum basis. They are stored on queues. They do not go into the books of the banks until the final approval from the back office. So those are the communications or channeling of transactions or the steps of approval of transactions that are usually happening in a treasury environment. All these checks and controls are needed because of the high value, high volume of transactions and the sensitivity of those transactions to the profit and loss accounts and the balance sheet of such institutions. And then also mere size of those transactions sometimes which may exceed the total power of the authority of the board of directors sometimes. Just imagine $1 million, $2 million, $5 million transactions. In rupee terms, it will be 200 into 5, 200 rupees into 5 million. So that may exceed sometimes even the board of directors authority. But there are instances where such transactions have been turned down by the middle office or back office unless they are consented or allowed by the respective approval authority. Okay, so I just want to explain that process before jumping into the payment and settlement systems. So on a broad basis, in our markets, in our Sri Lankan economy, the wholesale market systems and the retail market systems, these listed methods of payments or settlement are visible. Just please add anything or help me to make changes if new things have happened or amendment has occurred, right? So personal checks are issued by the debtor to the creditor in the transactions of a sale and purchase. And those personal checks, including bankers' drafts and official checks of banks, has to process through the bank's clearing systems, ending up with the Lanka Clear systems located at the 18th floor of the Bank of Ceylon building. Lanka Clear systems are managed by Lanka Clear company, owned by the central bank and all the banks, all the commercial banks. They have access to the central bank accounts maintained by those respective banks and primary dealers. to adjust the value of personal checks cleared, bankers' drafts, and official checks cleared through the clearing system, Lanka clear systems, on a daily basis. So it is a very vital and important system that the Lanka clear manages. Until the Lanka clear system introduced the fifth item, check imaging and truncation system mechanism, it's a huge computer system that came to help. Until they installed that or implemented that, the clearing system of personal checks and bankers' drafts and official checks took minimum 7 days. Within Colombo checks, it took about 3 days, but peripheral Greater Colombo and then not so distant districts took about 7 days. And then faraway districts took about 18 to 21 days to clear the check. But the check imaging and truncation system enabled the clearing system to expedite or exchange the value of a check from the buyer's bank to the seller's bank. Buyer who has to pay through a check to the seller, and the seller banks deposit the check into his bank. The value has to transfer from the buyer's bank to the seller's bank through the clearing system. So once the seller, on receipt of the check from the buyer, he deposits the check to his account maintained at his bank. So that bank, through a special scanning device, which are available at each and every branch outlet of large banks and small banks, the face and the backside of the check is scanned and truncated or communicated to the Lanka Clear system through a specialized file management system, through lease line communication lines. So unlike before implementation of check imaging and truncation system, we call it CIT system, a check deposited by the by the seller on receipt of the check to his bank before 10 o'clock can get into the same day clearing as well, if it is properly managed. Even a branch of a bank in Jaffna depositing a check and issuer's bank maybe in Hambantota, still it can transact or exchange value on the same day, or in most cases the next day. In most cases, because all the checks may not come by 9 or 9:30 or 10 o'clock in the morning. If it gets into the first batch of Lanka Clear system, it can very well transfer value on the same day. But most of the checks get into the second cycle process at about 2 o'clock, and then the value is usually exchanged on the next day. So that is the Lanka Clear system, and the exchange of value from one party to the other party through personal checks or banker's draft or official checks. What is the difference between the personal check and the banker's draft or official check? Official check means issued by a bank, official bank. Personal checks are signed by an individual who maintains an account with a bank, drawn on his own account. He has to have money to draw his check. Banker's draft or official checks are issued by bank and signed by two officials of the bank at the request of a customer. Say I can go to a bank and then ask, can you give me a banker's draft or your bank's official check by debiting my account? I had authorized the bank to debit my account, and then the bank takes out the money and then they process and then give me a check leaf signed by two officials of the bank. Because that is a confirmed check, because a recipient of the banker's draft or official check knows that the customer or myself who is indebted to somebody else, or the recipient of the banker's draft or the official check, that I have paid the bank already, and the bank in his capacity as the bank is obliged or indebted to pay for that check when it comes through the clearing. So therefore, banker's draft or official checks is nearly risk-free in financial instrument compared to a personal check, because personal check signed by the person itself, there can be money in the account or there cannot be money in the account sometimes. So therefore, it is risk-wise, personal checks are more risky. Right. So we come on to the next part of point number 3 in the slide presentation: ATM cards, debit cards, and credit cards. Because of the innovation of ATMs and the issuance of plastic card, 2-3 things happened. A revolution has happened in the financial world. The plastic card carried by the account holders of banks can walk into ATM of that particular bank, or now ATM of any bank connected to Lanka Clear or the common payment switch, the item before last. I may take an example. A customer who maintains an account with Bank of Ceylon, who's having an ATM card, can travel anywhere, and then he sees an ATM maintained by commercial bank. He can go into the commercial bank ATM, put his password, PIN number, and withdraw money or transfer money to some other beneficiary. So therefore, that this innovation of ATM cards, ATM machines and ATM cards prevented or avoided the necessity to carry cash or amount of checks issued by personal checks issued in the market reduced. So that's a good thing. So ATM cards helped the transfer of money from the debtor to the creditor swiftly, or the necessity to carry money or cash in the wallets reduced. So therefore, it was a big gain for the bankers as well, because before introduction of ATM cards, bankers had to maintain vault cash in huge sums, at least 5% of the total deposit base. If one bank has 100 billion worth of deposits, 5 billion had to be maintained by with their vaults, because any moment customers might withdraw because they may have to travel or they may have to pay somebody else soon. With the introduction of ATM cards and debit cards and credit cards as well, the necessity for the bankers to maintain that up to about 5% of deposit base reduced to about 3%. So typically a bank maintaining 100 billion deposit base and with the necessity to maintain 5 billion vault cash now has to maintain less than 3 billion. So balance 2 billion, 5 billion minus 3 billion, they could use that to lend money in the interbank market or lend to the next borrower and create more assets and economic activity enhanced. So therefore, ATM cards, just to withdraw from ATM, or debit cards, debiting to the debit card, debiting to the account, their own account and withdrawing, and credit cards with a limit, credit limit, enable a revolution in the market. Traveler checks was taken out of the Sri Lankan market about a few years ago, about 5, 6, 7 years ago. So for the moment, we'll avoid from the discussion. Traveler checks, but still there are countries in the world who practice traveler checks or who use traveler checks. But in Sri Lanka, we don't use traveler checks. So Sri Lanka interbank payment system or slip system is another popular system which is used by the retail market, especially to make bulk payment. Example, the government treasury use slip systems to pay the teacher's salary or the doctors and health service personnel, nurses, salaries on the payment of salary day. They prepare a disk or CD or a file, computer file with a list of recipient of the salary and send it to Bank of Ceylon, where they maintain the account, treasury account, and then authorize the Bank of Ceylon to debit the total sum to the treasury account and then pay the teachers and the doctors and the nurses' salaries wherever they maintain accounts. In whatever the bank they maintain the accounts. How do they do this? The Bank of Ceylon debits the government treasury accounts with a lump sum and then send the file, computer file to the Lanka Clear system, Lanka Clear office with a list of names, beneficiaries, and account number and the name of the bank with the bank code. So that particular file, when it is processed by the Lanka Clear, the Bank of Ceylon account is debited with the total amount payable to other banks like HNB, Commercial, Panisha Bank, Sampath, Ceylon, and all the other banks, where the beneficiaries, doctors, nurses, teachers maintain their accounts, and those banks' accounts are credited by the Lanka Clear instantly. And a message is sent to those banks, HNB, Commercial, Ceylon, Sampath, Panisha, and other banks, that with a file, the name list and account numbers and the names of the branches, where to credit the funds. So this happens instantly. But however, the customer accounts are credited with the finality by at least next day. So one day lapse might take place, but still the slip system is very efficient that way to process the payments. But still is managed by the Lanka Clear system, Lanka Clear company at the Bank of Ceylon 18th floor. Then we come to SWIFT. Can anyone tell me what stands for SWIFT? Yes.
Society for World Bank, Interbank, Financial Telecommunication.
Great. That's super. Society for Worldwide Interbank Financial Telecommunication. Very good. And where is the head office located? SWIFT? In Belgium. SWIFT is a system introduced or incorporated or inaugurated by 1960, like a cooperative society. What do you mean by cooperative society? It is an association or union with memberships. So each bank, each primary dealer who has a SWIFT system is a member of the SWIFT association, SWIFT organization. And the uniqueness in SWIFT is that whilst it is a cooperative society, it's a company, say, I think one of the world's largest companies. The SWIFT members are in about 210 countries in the world, and total membership runs up to about 12,000 members around the globe. All the banks, funds, primary dealers, mutual funds, building societies in other countries who have to who has to make payments to other financial institutions. It's a wholesale financial telecommunication system with security, encoded security. The beauty of the SWIFT system is that SWIFT company is that it has not borrowed even a single cent from any financial institution, and it runs on its own members' money. It is not indebted. There is no interest expense on loans or any money borrowed. But it charges membership fees from each member on accepting as a member. There's a large sum to be paid. So it is expensive system for the members to use it. But still the security that it provides for the interbank financial telecommunication or fund transfer is unique. SWIFT, the software and the hardware used by the members all are provided by the SWIFT, this particular company only. Any other vendor, any other producer is not allowed or permitted to produce or supply the software system or the hardware system. So therefore, there is very less opportunity for any hackers to get into SWIFT system if the members manage their passwords and firewalls and then other mechanisms to protect the system are properly implemented in their own sites. Then the SWIFT is very secure. Because imagine bank to bank or a bank to primary dealer or bank to mutual fund, a bank to building societies, large sum, millions and millions of dollars and euros and any currency, any other currency is transferred. The security of the transaction and the communication line matters. If they are breached, there can be a lot of frauds happening. There was one instance where Bangladesh Central Bank hackers hacked into the system, and on a Thursday, because Friday is a holiday in Bangladesh, Friday and Saturday are holidays. On a Thursday evening, they hacked into the system, Bangladesh Central Bank, and then operated on their account maintained with the New York Federal Reserve, U.S. Central Bank. So central bank to central bank maintain the account with the central bank network. So Bangladesh Central Bank's US dollar account was within US Central Bank, which is called Federal Reserve New York. So that particular account was sent a couple of SWIFT messages transferring funds to other few banks in Philippines and Sri Lanka. Is the connection okay?
Yes, sir.
Thank you. So what these hackers did was they got into the Bangladesh Central Bank's SWIFT system, hacked into it on a Thursday evening, and transferred about $1 billion, $1,000 million, of which only $20 million came to Ceylon Bank in Sri Lanka. Sorry, not Ceylon, Pan Asia Bank in Sri Lanka. So Pan Asia Bank, when they processed the $20 million payment to the beneficiary was an NGO organization. Beneficiary account was maintained at Pan Asia Bank, and that was an NGO organization. That NGO organization had previously seen the account has seen transaction only about few thousand rupees, not large amounts, but $20 million in terms of rupees is huge. So the one lady who was operating at the Pan Asia Bank, inward remittances, processing, crediting the accounts, noticed this discrepancy, the size of the value of the payment, and she shouted an alarm bell. She alerted the senior officers and said this large payment to this particular account. So, and their correspondent bank was Deutsche Bank. And then the Pan Asia Bank senior officers alerted the Deutsche Bank. So finally that payment has stopped. But however, the payments went to Philippines and one or two other countries. They have gone to the payments have been processed and gone to the beneficiary accounts, and they have withdrawn the money and vanished. But because of the Sri Lankan payment alertness at the Pan Asia Bank, that was prevented, and then the fraud came to light, and then finally Federal Reserve New York was informed. So that was sorted out like that. So the SWIFT system, the importance of maintaining security is very much highlighted, and thereafter also SWIFT system brought in certain more other controls, preventing the maintenance of breaches or preventing weaknesses in maintenance of the SWIFT computers and the passwords, and accessibility to any unauthorized persons. So all the settlement arising out of the transactions initiated by the money brokers between banks and primary dealers, settling the funds coming from the seller to the buyer or lender to the borrower, are channeled through the SWIFT system of banks and primary dealers. So you should be very much in the know-how or knowledge. You should possess that knowledge, how these payments are being channeled through and then accepted from the lender to the borrower and seller to the buyer. So importance of SWIFT system is very important, in particular in Sri Lanka. Why do I say that? The real-time gross settlement system, that is the next item, RTGS system, and also check imaging and truncation system is the communication, the real-time gross settlement system and the scriptless security settlement system, where transfer of treasury bills and bonds is based on the SWIFT messaging system. Sri Lanka use the SWIFT messaging system to transfer funds through the RTGS system and transfer securities through the SSSS system. The communication mode is SWIFT. It is costly to use SWIFT as a communication system because SWIFT company charges per message tariff to the user or the originator of the transaction. I can remember when somewhere in 2003, when the RTGS system and scriptless security settlement system was introduced by the then Deputy Governor, Dr. Rani Jayamaha. She had an elite committee appointed to implement this system, and we had to deliberate a lot of issues. Around the same time, only India introduced the RTGS system. Indian authorities indicated that they will not use SWIFT because it's a Western system, having headquarters in Belgium. They said they have enough and more systems in India to use than paying for companies in the Western Europe. That was the actual words uttered by the Indian Reserve Bank of India senior officers. However, Sri Lankan Central Bank took a firm decision that we are going through the SWIFT. We are going to use the SWIFT system to communicate RTGS and SSS messages. So that paved the way for a successful completion within a very short period of time to implement the RTGS system and the SSS system in Sri Lanka, whereas India took several more years to complete their system. Okay, so SWIFT system and the RTGS system and the scriptless security settlement system are really important. So RTGS system is a real-time cross settlement, is also known as Lanka Settle system, and the scriptless security settlement system is also known as Lanka Secure system, the brand name. So for our bit of function carried out by the money brokers and the bankers and the primary dealers, this RTGS system and scriptless security settlement system is extremely important, and all should be reading through and then researching through for the functionality of the system with all the new development that is coming in with these new systems. Okay, so now next item, common payment switch. Actually, common payment switch is also something to do with connected with the ATMs, debit cards and credit card systems managed by Lanka Clear company. Because of the implementation of common payment switch, ATMs of many banks, HNB, Commercial, Sampath, Ceylon, Bank of Ceylon, People's Bank, Vanisha Bank, Union Bank, any bank systems, ATM systems, are interconnected through a common payment switch. And when a HNB customer goes to a commercial bank ATM and withdraws money, he withdraws from HNB account. So HNB has to pay commercial bank. So the common payment switch facilitates that transfer of money from HNB's account at the central bank to be paid to commercial bank account at the central bank. So the software that is supporting is common payment switch. So therefore, the customers of all banks have the network of about more than 2,000 ATMs machines. When all the ATM machines of all the banks together to be used. The difference is that when the HNB customer goes to the HNB account, HNB ATM and withdraws money, only 5 rupees is debited to his account as charge. But when the HNB customer goes to the commercial bank account, ATM and then withdraws money, he is charged about 30 rupees maximum because of the requirement of transferring funds from the HNB to commercial bank. So therefore, that's another innovation that has come, use of common payment switch. So the last one, common electronic fund transfer or SEFT. SEFT is a similar system to slips, but is more frequently used in ATMs as well. If I want to transfer using my HNB account to another beneficiary maintaining an account at Bank of Ceylon, I can use the ATM or my internet banking account, internet banking system through my smartphone or laptop. I can ask the HNB computers to debit my account and transfer money to Bank of Ceylon, giving the Bank of Ceylon bank code and then the beneficiary account number to credit the money from debiting my account. Again, a charge of 30 rupees is debit to my account, apart from the money that I want to pay. Say if I want to pay 100,000 rupees, I'll be charged 100,030 rupees. My account is debited, and the 100,000 is transferred and credited to the Bank of Ceylon account wherever he maintains his account at any branch of Bank of Ceylon, at any corner of Sri Lanka. So common electronic fund transfer system is very handy, and it also nullifies the requirement of issuing personal checks and using other modes of physical fund transfers, and it facilitates electronic fund transfers using internet banking systems through a smartphone or a laptop or a desktop at home. These systems actually help the Sri Lankan population, Sri Lankan customers of banks in the recent COVID-19 pandemic, where they did not have to go to the bank's branches, visit the bank branches to withdraw money. They need not go to even to the ATM machine. They could do it using the smartphone, laptop, or a desktop. So therefore, the economic activity was carried out at least at limited scale, and at least the purchasing of essential goods for the families was possible through the door-to-door delivery systems by the supermarket chains and various other delivery mechanisms, delivery companies, by payment through the internet banking system or common electronic fund transfer systems. Right. So payment settlement system, we segregate all the systems discussed previously to two categories: low value payment system and high value payment system. The slip system and check imaging and trunking system, and then even the common electronic fund transfer system (CEFT) are considered low-value payment systems. But the RTG system, Lanka Settle system, and the Lanka Secure system or the security settlement system are considered high-value payment system because they are facilitating the large value payments. Just the segregation of categories of payment systems available in Sri Lanka. I must emphasize that thanks to the Central Bank of Sri Lanka, the payment settlement system created in Sri Lanka is in par with countries like Singapore, Hong Kong, Tokyo, UK, Germany, Japan, or US, the first world countries. Unlike a few other neighboring countries in the Asian region, Sri Lanka is far more advanced in the payment systems and settlement systems, including the laws relating to the payment and settlement systems and the facilities and infrastructure created by the Central Bank of Sri Lanka has brought Sri Lankan markets, Sri Lankan economy to the highest level of standards of first world countries when we speak of payment and settlement systems. So that is one of the, at least one of the requirements for Sri Lanka to become Colombo to become a financial hub of the region or the financial hub of a region or the world is fulfilled. It is up to us to create the other requirements such as increased financial instruments and length and breadth of the depth of the financial markets and the laws of maintaining peace and harmony in the country. If they are created and accepted by the world, we can very well see a lot of foreigners, a lot of overseas high value companies coming and investing in Sri Lanka. So at least the payment and settlement systems created by the Central Bank of Sri Lanka is one feather in the cap of Sri Lankan economy to become the march forward towards the financial hub, at least in the region. Payment and settlement systems, availability of appropriate payment systems is demonstrated by the variety of the payment and settlement systems implemented by the central bank and bankers, primary dealers, and the other intermediaries who serve the end users or the common person, common man on the street and the villages should be able to and they should be knowledgeable to use an appropriate payment system when the end user requests a transfer of funds to a party to conclude the economic transaction. The use of appropriate payment system is very much important, not only by way of charging fees for this particular system to the end user, but the efficiency of transfer of funds and adherence to the particular value date. When we speak of adherence to value date, Sri Lanka has the immaculate record of adhering to the value dates, like payment on a spot date or a forward value date. The chances of payments initiated by the Sri Lankan banks and primary dealers to reach the beneficiary's account on the particular date is very great, and it will reach the destined account on the value date because of the efficiency of the payment and settlement systems. But when we about 5-10 years ago, when we were active bankers, when we used Indian banking systems or Bangladesh or Pakistan or any other countries, payment settlement systems, adherence to the value date is unheard of. Sometimes spot value transactions will get into the beneficiary accounts after 3, 4, 5, 6 days. Eventually, forward value dates might take even more number of days. So Sri Lanka have had an immaculate record of meeting the particular value date sharp on the date. So avoidance of settlement risk known as Herstatt risk. Herstatt is the name of a bank, a German bank. So my 1980s or 70s, this Herstatt bank, those days there was a currency called Deutsche Mark. Now they use euro. US dollar Deutsche Mark deal between Herstatt Bank and another bank, another US bank. Herstatt Bank bought dollars and sold marks. Sorry, other way around. Herstatt Bank bought marks and sold dollars. So on the value date, say spot date, 2 working days forward. On the spot date, Herstatt Bank received the Deutsche Mark into their account with the central bank, the Bundesbank in Germany. But when they were required to pay the dollars to the buyer of the dollar or the US bank account with the Federal Reserve New York or the correspondent bank where the Nostro account maintained at the US bank, there were a time gap of 4 hours between Germany and US. The Herstatt Bank failed, got into bankruptcy. So therefore, the settlement risk was real for the US bank. So therefore, this particular risk is known as Herstatt Bank, Herstatt risk. Imagine between settlement process of a transaction of Forex deal, dollar Deutsche Mark deal. Deutsche Mark was delivered. The other leg, delivery of dollars, the bank is not in existence. Herstatt Bank had gone to liquidation. So it's a real settlement risk that has really happened. So Swift MT 202, now I failed to describe the methodology used by the Swift system to categorize the Swift message types. MT stands for message type. And Swift system, the software system, categorizes or segregates the messages into 10 categories. Message type starting with 0 to 199. 0 to 99 is the Swift system maintainers message types. 0 to 99. Then Swift message system message type 100 to 199 is customer involved transactions. Message type 200 to 299 is interbank or interfinancial institution transfer messages types. 200 to 299. So likewise, 300 to 399, 400 to 499, 500 to 599, 600 to 699, 700 to 799, 800 to 899, 900 to 999 are different message types. This segregation of message types facilitates the clear communication of the intention of message originator or sender to the receiver of the message. Bank A sends message type 103 to Bank B. Bank B knows that it is a customer account payment. And Bank A sending message type 202 to Bank B. Bank B knows that it is an interbank transfer, like that. And message type 546 sent by Bank A to primary B. Primary B knows that it is a securities, treasury bill or bond involved transaction. And message type 700 from Bank A to Bank B. Bank B knows that it is a international trade, letters of credit related transaction. Bank A has issued and communicating a letter of credit to Bank B, message type 700. And message type 900 is a general type of communication. So likewise, it is very handy in getting the bank's own core banking computer systems program to accept the SWIFT message and process a payment without a human being involved, without a staff member involving to process the transaction. Example, SWIFT MT103 is sent by Bank A to Bank B. When the Bank B receives the MT103 payment from Bank A, computer knows, Bank B's core banking system computer is aware that when it is a 103 message, it's a customer credit transaction. And it will look for the customer account number and the customer, the branch that the customer maintains account. And if all those fields in the message, SWIFT message 103 is properly and accurately completed or populated or filled by Bank A before sending it to Bank B, the Bank B's computer will read through and identify that it is a customer payment, and read through and identify which branch of that particular bank where the customer maintains account and what is the customer account number. And if the payment is $5,000 or rupees 500,000, that will identify the account and credit instantly. Before you bat your eyelid, the customer account is credited at the Bank B. So that's the beauty of it. That is why the SWIFT system is critically important for a bank, particularly, and a primary dealer. The core banking computer systems are programmed to process these messages without involvement of human beings or a manual staff member. If there is an error in the digits of the account number or bank code number, branch code number, only message will go and lie in a queue where a dedicated staff member is appointed to look at the erroneous messages, channeled to a queue and awaiting instructions to be processed, to be corrected after communication with Bank A who sends the messages and obtaining confirmation. So therefore, it is enabling straight through processing, STP. It is a matter of enabling STP or straight through processing or machine processing without a human being getting involved. Mind you, when there is an error in the message population, account number wrong digit or branch code wrong digit or something, any other currency code difference, and if the staff member, human being, has to get involved to reach the sending bank or Bank A and obtain confirmation of the correction, there will be a charge levied to the bank A, a penalty for processing erroneous message and sending it to the bank B, requiring a staff member to waste his time or commute his time to correct that message. So usually the international systems, international banks charge for the correction of the messages from the sender of sending bank of the message. So to this extent, the automation has happened. So when it comes to particularly 200 type messages, 201, 202, this type of messages, interbank, interfinance institution payment messages, which are majority of the forex deals and then money market buyer seller or lender borrower deals, are processed in those category of transactions, and they are processing of the SWIFT message in the correct account number, correct branch code, and then various other information populated on the SWIFT message is very important. Otherwise, there can be a large bill or cost to pay for incorrect processing of messages. So this is very important for the knowledge of the money brokers as well. Because after having concluded the transaction through the money broker, forex back office, treasury back office people, if they fail to populate a message correctly, or if the message is populated incorrectly, there can be a charge payable for correction of the message levied by the recipient or the beneficiary bank. So, which is very important to note. SWIFT message 300 type is a forex deal confirmation between banks. Deal confirmation. When the forex deal is completed between two financial institutions, the confirmation is transfer or sending of confirmation. If the SWIFT system is used, it is the 300 type message that is being used. But in Sri Lanka, we don't use SWIFT message because the cost of SWIFT message that at the month end that the bank may be required to pay to the Belgium SWIFT head office. So therefore, in multinational banks, the international banks, they use SWIFT MT300 series to exchange confirmations. Message type MT320 is used to confirm the money market deals. So these things are important for you to know, and then see what you can do. Incidentally, we are approaching only about 10 minutes more, but I thought of the next tutorial that I shared with you is this. Is it visible to everyone?
Yes, sir.
I thought of discussing a few MCQ questions, sample MCQ questions. So it is, those questions are at the end of this presentation. Since we have come up to the more or less end of the today's session, let me start with the MCQs before going to this particular presentation per se. Okay, I think there are about 4 or 5 questions. I just thought of sharing this with you. These are the model of MCQs you might get at the end of the semester. Sample MCQ. When are the spot forex transactions due for settlement? When are the spot forex transactions due for settlement? Answer A, there are 4 answers. You have to choose the correct answer. On the day following the transaction. Answer B, 2 working days after the transactions. Answer C, 5 working days after the transactions. Answer D, 7 days after the transaction. Can you tell me which is the correct answer?
B.
Answer B.
Very good.
B.
B. B. B. B.
B.
Anybody who has a different answer?
B.
Everybody says B, is it?
Yes.
Anybody having a different answer? Sorry? Can you repeat? Okay. Yeah, since you are brokers and since you are engaged in the transaction on a daily basis, it is 2 working days after the transaction. That's true. Can you tell me why these 2 days allowed for settlement or spot deal? Why didn't they use the same day or next day from the beginning? In short, why is the spot concept involve settlement in 2 days transaction, 2 days after transaction? Why is it that? Any reason? Any logical reason? Can anybody come out with a reason? Yes, no?
Because of the settlement risk. Because of the
Settlement
settlement risk.
Settlement risk. That's a too broad answer. I think the answer is there, I know, but it's a too broad. Can you be more specific?
Is it for liquidity purposes?
Sorry, repeat.
Is it for liquidity purposes, sir? To manage liquidity?
Yes, partly. Provision of liquidity in the Nostro account. Yes, partly. But since the wholesale market forex transactions involve large volume of funds, and SWIFT, I told you, SWIFT came into being support of settlement of transactions after 1960, and 1960 also it started with only about 10 or 15 banks, and then to spread it out to the rest of the world, it took another decade or more. But those days, the communication mode was Reuters or telex machine. I don't know. I wonder that some of you have seen a telex machine. It is subject to a lot of errors in typing. You know, the guy has to sit in the front of telex machine and type. So in each character typing, it reflects in the machine of the recipient bank. So therefore, to secure the payment, large value payments, the telex machine has to be authenticated as well. There was a test key exchange outside the telex machine being communicated. A test number was indicated, communicated to the recipient from the sending bank to the received bank, a valid test number agreed secretly between the 2 institutions. The test number, validity number, agreed number, say starting with 1000, 1001, next number, 1002, next number. The other parties outside to these banks wouldn't know that they are starting the number with 1000 and with the sequence of one after the other. So those days it was a matter of confirming the authenticity of the large value fund transfers by the recipient bank from the sending bank, including verification of the test keys. So it took time. So they allowed 2 days to verify the authenticity of the transaction because of $1 million and $2 million, $5 million, $10 million, $100 million transactions are communicated, payments are communicated through the telex machine. So therefore, globally, as a concept, spot means 2 working days forward. And the cash flows of each currency of each bank, not only each bank, even each government, each multinational company used to arrange or cover the liquidity portion of the nostro accounts, cash flows 2 days forward. In that case, practically today's cash flow would have been managed 2 days prior. And tomorrow's cash flows would have been managed yesterday. And it is a balanced receipts and payments. And today, the dealer or the treasurer is going to manage day after tomorrow's cash flow. Today being Thursday, it will be Monday's cash flow be managed today. So it is partly liquidity management, therefore, provision of liquidity to meet the payment of this $1 million, $5 million, $10 million, $100 million transaction. So that is how the 2 working days after the transaction concept evolved. Okay, thank you. Little bit of lengthy MCQ. Which of the following are true in relation to currency dealing? 1. Spot FX trades are quoted as bid-offer spreads. Again, the question is, which of the following are true in relation to currency dealing? Spot FX rates are quoted as bid-offer spread. That's true, right? Forward rates are generally quoted as bid-offer margins against the spot rate. Is that true or not? Then forward FX contracts are standardized and tradable. Are they? Fourth one, all currencies are quoted only against the USD. So at the glance of it, the fourth one is incorrect, am I right? So from A, B, C, D, what is the pick of your answer? B?
Answer A.
Okay. Anybody has a different opinion?
A.
Sorry? Spot FX rates are always called bid and offer. That's correct, isn't it? Then the forward rate generally quoted as bid offer margins against the spot rate. Is it true? What are the bid offer margins against the spot? It's generally premium or discount, isn't it? Anybody disagreeing with that? I heard one voice saying that is correct by saying answer A. 1 and 2 only correct. Like you want, the second one should be correct. Is the third and fourth statements are incorrect? Or how about answer D? Is the fourth one correct or not? No, it's not correct, no? So then the correct answer is A, 1 and 2 only. Does anybody have a different understanding? No? Okay, good. The following are true of the Forex market except, meaning you have to choose the incorrect one. A is dominated by the forex dealer of commercial banks. B includes spot deals which must be settled 2 business days after the date of transactions. C, foreign exchange brokers link buyers and sellers. D, it quotes every currency against the US dollar. What is your pick of the answer?
D.
D is incorrect. That's right. D is incorrect. Anybody have a different opinion? Okay. So we have passed 3 minutes, 6 o'clock. These two are calculations. If you were quoted GBP 1 equals USD 1.5997 and 02 bid and offer, and you sold GBP 5 million, how many USD you would have bought? When you sell GBP, you buy USD, right? So it's a matter of doing the calculation. What is the rate you can use? Do you have a calculator in front of you?
Yes, sir.
So what is the answer?
7.9985 USD.
Answer C.
Yes.
Yes.
Right. Does anybody get different answer? No. So answer C is correct. Okay. Next, it's the last question. If you are short dollars in USD CHF, what is CHF?
Swiss franc.
Okay, good. If you are short dollars in USD CHF and you get the following codes from the market, which is the best for you? You are short dollars in USD CHF. So if you are short dollars, what do you have to go to do?
Answer D.
Why do you say answer D?
Because the offer is lower.
Lowest offer. Okay. What is the offer?
1.5253.
1.5300. That's correct. Okay. So for money broker, these are very simple things, isn't it? All right. Okay, then we have more or less come to the end of today's presentation, the first week of the course. And we'll be meeting on next Tuesday, 30th. So let's come prepared for next week. And more importantly, I would love to hear some difficulties that you encountered with the writing of assignment when you are in next week, because you have the weekend plus Friday and Monday both. So I would love to hear some difficulties that you encountered in writing the assignment. All right.